you're not going to be dependent on just going into a bank and getting loans, because smaller and regional banks, they're the biggest lenders to business owners and to real estate folks, right? So liquidity is going to dry up. So what we are doing is saying, we are looking at what's happening. We're seeing how this is unfolding, and this is dominoes kind of falling on top of each other. So we're being proactive, and we're positioning capital, and we're diversifying operating capital in banks to protect ourselves. So eventually you want to be in a position where you have access to liquidity when liquidity dries up, because then if you're the person with liquidity in a very liquidity scarce environment, you're going to be able to capitalize on opportunities.
Yeah, so let's talk about that. So one of the things that we brought you on here, and we'll go ahead and drop some of that playlist, has been the whole life insurance policy and the infinite banking concept. And you're as good as I've seen with that. And I've talked to a lot of folks about that concept. Can you touch on that right now and why that's more critical than ever to utilize, vehicles like that to protect against, times like this, but also to utilize that as an investment vehicle to snatch up these discounted assets that we're going to be finding right now?
Yeah, the first thing is, so for new viewers, so the infinite banking concept strategy is when you use a dividend-paying whole life insurance policy with a mutual insurance company, structured very specifically for cash value. So for the savings element in the policy, not just the life insurance, and it's essentially a vehicle where you warehouse capital. And now, why would you warehouse capital in one of these vehicles? Well, it's outside of the banking system and the Wall Street casino. Mutual insurance companies have been around since the mid-1800s. They've been extremely profitable every single year since the mid-1800s. There's one of our carriers that we structure these policies with. I mean, we're talking like 1847, and every single year they've paid dividends, which means they've been profitable. That's prior to the Civil War.
Just to be clear, every single year.
Every single year
they paid out dividends.
Yes, and if you look at if you want to stress test, let's just say those companies and the vehicle where you warehouse this capital. Think about, wars, whether it be the Civil War at the time in the United States. Most people don't know this, but you had two types of currencies moving around, right? You had greenbacks and graybacks. And during a time of such uncertainty, literally a civil war, these companies were profitable. Then you had, world wars, two of them. You had the Federal Reserve was only created in 1913. Most people don't know this too. They just take it as it's always just been there, right? That was created. Then you had global monetary changes. In 1944, Bretton Woods was established. You've had recessions, the Great Depression. You've had the crisis in the 1970s with President Nixon closing the gold window on the world in order to, they no longer allowed it, the convertibility of dollars into gold. And then the petrodollar was established. So they've gone through all of these many different crazy scenarios, and they've been very, very profitable. So very important, counterparty risk is huge. And I've mentioned counterparty risk consistently for the last 3 years. It's going to be one of the biggest risks that investors face out there. So that's why you put it in there. It's with a mutual insurance company. The vehicle has your capital guaranteed. It's guaranteed to grow tax-free. You get dividends, which is not guaranteed. But like I just shared, they've paid them consecutively every single year since the mid-1800s, which the dividends are also tax-free. You get tax-free access to your capital and guaranteed access. This is also huge, because if you remember what happened to HELOCs in 2008 and 2009, a lot of folks realized that they're not guaranteed. So you have guaranteed access to capital. And then, of course, it has a death benefit because it is a life insurance product, which then goes tax-free to your beneficiaries and so forth. The beauty with this vehicle, when it's structured correctly, is you can set up a life insurance line of credit. And there's many different ways to do this, but you could set up a life insurance line of credit using the cash value. So what this means is you never draw down your account value in there. You have a line of credit, which you have guaranteed access through the insurance carrier to this line of credit, which you then can use the capital to then capitalize on opportunities. So why I think this is so powerful and it fits in so well during uncertain times is it provides that certainty that your capital is out of the banking system. It's also out of financial markets, so it's not tied to the stock market. So the first thing is protect that capital from the storm, and then put it in there so that you have guaranteed access to it so that you can use it to then capitalize on opportunities, because there's many steps so that most people will not protect their capital properly. So they're going to lose their capital or not have access to it. And the second thing is they won't have access to that capital, even if it survives, and to then capitalize on opportunities. So you want to have it in a place that will weather the storm, and then where you have guaranteed access to then go buy assets at a discount. I will say this, here's a little fun fact that I saw this last year in November and December, and there was a lot going on. I think you and I also shared this in a previous conversation. Remember how the Vatican recalled all of their liquidity out of the financial system back to the Vatican Bank. And we at that time said, wow, what's going on here? Well, now we know with the banks going under that there definitely was something coming. But what I also saw was a lot of wealthy individuals and families set up these policies, like in family offices. They had a massive year doing that because, the insiders know this is a place where the capital can survive, which can then be leveraged and used to go and acquire assets at a discount. So in times of uncertainty, you want to position yourself where there are certain things that provide an element of certainty in your overall strategy.
Yeah, absolutely. So the writing's been on the wall for this for a while, guys. And to MC's point, we've done videos on this. A year ago, talking about exactly this ultimately happening, and it's happening right now. So, guys, we brought MC on at a very critical time right now. So, if you do have cash, if you're terrified of the banks right now, if you want to warehouse your cash in a very safe place, and then ultimately have that also as an investment vehicle to capitalize on distressed and discounted assets that are certainly going to be coming about right now. Reach out to he and his team and see if it's a good fit. Get some more information from them. You can email ninja@vipfinancialeducation.com. We'll drop that link below. Be sure to include your first, your last name, the best phone number to reach you, and VIP conversation in the subject line, and someone from he and his team will get back to you right away. There could not be a more relevant time to be talking about whole life and obviously the IBC. So thanks for diving into the IBC for us on these whole life insurance policies. One of the questions that I often hear, and you probably get that a lot if you don't mind explaining, is about the death benefit that comes along with these. So there is a built-in death benefit that the insured takes advantage of while they're alive still. Can you explain, how that works, and then when they can start taking advantage of that?
Yeah. So most people, when they think of life insurance, they think somebody has to die in order for someone else to benefit from that, right? Well, how these policies are structured is it's structured, as I mentioned, with a dividend-paying whole life insurance policy with a mutual insurance company that has that death benefit. So it has the death benefit feature, but there's also cash value because it's structured, as a supercharged savings account. So you have a death benefit usually of a multiple of your account value. So if something should happen to you, your beneficiaries, whether it's your spouse, your children, or a trust, will get a multiple of your cash value that's in that account. You compare that with a 401k and an IRA, and I've heard a lot of folks have self-directed, IRAs and so forth. If something should happen to you, then your beneficiaries will get the value of that account minus the taxes out, right? Mm-hmm. Where in this case, you not only get the full value of the account, but you get a multiple of that out in your death benefit, tax-free to your beneficiaries, whether it be your spouse, your children, or a trust. So it's a very, very powerful element to this. And we talk a lot through the infinite banking concept strategy about the supercharged savings account of that, and obviously having your money doing two things at once. But it's pretty powerful to have that in place. And if you get to, especially your later stages in your life, right? Pretty close to retirement. There might be people, they're no fault of their own, that come to a crossroads. Well, do I spend what I've accumulated during my lifetime on retirement, or do I leave some for my children? Having something in this vehicle allows you to do both. It's sort of a permission slip that you have, that death benefit, because you can tap into the cash value, and through the strategies that we teach, you could take out a tax-free income stream from retirement. And eventually when you pass away, the death benefit, obviously minus the amount that you've taken out while you were alive, then still gets paid out tax-free to your beneficiaries. So it's a very, very powerful strategy. Here's the central theme about it, and this is why I love it so much and I'm so passionate about it, is in life, in general, even outside of life insurance, I like choices and I like options. So if I have one thing that provides a ton of options and a ton of different opportunities that I could do with it, then I love it. And that's the big thing, because a lot of folks think, do I have to do life insurance? Do I have to save and protect my capital now, or do I deploy it? Well, you can do both. You can save and protect it and deploy it when it's needed. And of course, through the later stages, you don't have to choose about whether I draw from my accumulated savings in my life or whether I leave it for my children. You can have your cake and eat it too.
At what point could you start taking a loan against that benefit?
So you take the loan against the cash value. So you have the cash value, the savings element, and you can establish a credit line against that 30 days after you funded the account. So that's very important for folks too. Once you set up the policy, the process usually takes about 2.5 weeks. It's all, based on your personal situation. But 2.5 weeks, you have your policy set up, you fund it. 30 days later, you'll be able to set up that line of credit and, access liquidity to go and use and capitalize on opportunities.
So you're saying within a 30 to 45 day window, if someone were to, their total intent was to utilize this as an investment vehicle, that's how quickly they can get going.
Yes. And another question that folks always also ask is, what can they use it for? Well, you can use this as an emergency account. When you have 6 months of just lifestyle savings and household savings in these policies, you can reduce costs in a lot of different areas and raise your deductibles on other insurances, right? By doing so. But yeah, you can have it as an emergency savings account. You can tap into it for medical emergencies. You can use it to pay off debt. You can use it to invest in your business, purchase real estate, use it as a down payment, or pay cash for it. You're in full control. You're literally your own banker.
Because of that, there's no types of seasoning guidelines like there would be, borrowing from a bank with their underwriting guidelines and things of that nature. All of those are eliminated with this vehicle.
Well, yeah, 30 days after the policy's been funded.
30 days.
Yeah, and that's the thing too. The life insurance carrier has your cash value and your death benefit for collateral. So they are protected twice on that side too, and you're on this side where you get to warehouse your savings in a mutual insurance company that's been around since the mid 1800s with guaranteed growth, access to dividends that's not guaranteed, and that death benefit that's very, very valuable for just overall contingency planning, whether it be on your family or business or your investments.
Got it. So guys, again, if you want more information from MC and his team about the infinite banking concept and whole life insurance, go ahead and email ninja@vipfinancialeducation.com. Include your first or last name, the best number to reach you, and VIP conversation in the subject line. Someone from he and his team will get back with you ASAP. So thanks for joining us on today's video, guys. Take care. Make it a great day.